How's it going? It's Rocky. Welcome to week number 17 of the $2,000 weekly challenge. Every Friday, we release content from our experience trading the E-mini futures, specifically the Dow Jones Industrial Average, which is the YM. Our goal with this challenge is to earn an income of $2,000 every week through a common strategy utilizing the MACD, which is what you see on the bottom here, and the stochastic RSI, which is what you see on the middle here. The difference though is I use a time-based chart, which is a 5-minute candlestick pattern as you can see on the left, and a tick-based chart, which are 512 ticks as you see on the right, which is utilizing Fibonacci candles. Basically my strategy, you can read about it on the description below or check out previous content that I have released in the past. Now let me show you an example of theoretically how I would have traded this morning if I had the capital to do so. Unfortunately, as I'll talk about later in this content, my money was tied up, so I wasn't really able to trade today, Friday, April 30th. I'm going to draw a vertical line so we're able to visualize this a lot easier. So I'm drawing a vertical candle at 7:10 on the time-based chart. And this is right when the crossover was about to happen on the MACD. So crossing down, which is a bearish sign. And if you look at the corresponding stochastic RSI, we are on the oversold area. So I like to short when I'm on the oversold area because I want to be with the sellers. So there's more sellers and that's usually when I do it. I guess traditional convention would say you normally short when you're overbought. But for my style, since I try to hold on for a shorter period of time, I would rather short when there are more sellers or more selling that's going on. So with this vertical candle, I would have shorted at the 7:10 candle. But with my strategy, I paired that up with a tick-based chart. So if you look at the tick-based chart, this vertical line was drawn at the 7:10 time frame. But as you can tell, tick base is a little different. The candles are not based off of the time. It's actually based on the ticks. So if you look here, and I'm going to draw this in a different color, the crossover on the tick base chart actually occurred around right here. And I will change that to a white so we can tell the difference. So that actually occurred at around 7:04 in the morning. So if I was evaluating this live and I wanted to enter this trade, and I am evaluating both the time base and the tick base, I actually would have entered at around 7:04 in the morning. So on this candle, when the crossover occurred on the tick base, so it crossed down, which is a bearish symbol, and we are on the oversold side. And if you look at the corresponding time-based chart, you know, it hasn't crossed over yet. So look at this white vertical line. It hasn't crossed over yet. But if you look at the MACD, it changed color, which means that the two lines are starting to converge. So I would have entered on that candle at 7:06, and I would have waited. I would have probably waited until we hit around 8:15 here. So ideally, we could have entered, let's just say in the middle of that candle at 33,826, and then at about 8:15 or so, let's just say we would have exited at 33,698. So that's about at least 120-ish moves. And with the two contracts that I did, that would have been $1,200. So that would have been a nice short in the morning. So theoretically, that's essentially how my strategy works. Now for the transparency part of the content, this is where I review my account statement for transparency. I don't do this to boast or anything like that. It's just more to show you that what I'm doing is real and we do make a profit out of it. Maybe not so much this week. Unfortunately, for this week, we didn't do so well. We made a profit of $515.92, which consists of 2 green days and unfortunately 3 red days. So as of Thursday, we actually already met our goal of at least $2,000, but unfortunately, which I'm going to go through later today, for Friday, we lost $1,387, and that's mainly because of a mistake that I made, which I'll discuss when we review that trade. And it's actually, as you can see on the statement here, it is a mark to market. So mark to market occurs at 115. So the mark to market price was at 33,767. I did enter the trade at 33,934, and that's why we have a mark to market loss of $1,670. So I've mentioned in the past that I don't like holding trades over the weekend, but it closed very strong in the last 10 minutes of the market. And I like how he was moving in the after hours, so between 1 p.m. to 2 p.m. Pacific time. So I'm going to take a bit of a risk on this and see how it reacts on Sunday. And hopefully, we'll be on the positive side and we can get that profit right back next week. So if we review our trades here, definitely not the best because I had a few mark to markets. So I did a mark to market here and then another mark to market here. So that's 2. And then a third mark to market, which is today. So I'm a little bit unfocused this week. Normally I don't like to do any mark to markets and leaving a trade overnight, but hopefully next week we can go back to a bit more focus and stick to a shorter time in the market and making sure that we're not risking too much by holding it overnight with these positions that we do have. So as you can see here, I did withdraw the usual money. I withdrew $1,000 and another $1,000 down here. So I withdrew a total of $2,000 for this week, which we're going to add on our ending cash balance. So for ending cash balance, we ended with $21,452.14. We did withdraw $2,000, so we'll add that to the ending balance, and then our starting cash was $22,936.22. And that's how we came up with our net profit for this week of $515.92. So like I mentioned, we didn't meet our goal. It's nothing spectacular, but I'm happy to say that this is our 5th green week. So 5 weeks in a row that we've been on the green. So I'm quite proud of that. So right now, what I'm focusing on is really consistency and the strategy itself. But of course, I'd be more than happy if we are making at least $2,000 every week. And then, like with our previous content, just to compare this to what a 95 typical 40-hour week would be like, try to divide the total by 40 hours. And for this week, our hourly rate would have been about $12.89. So that's gross. That's a gross hourly rate, which is how you would think of it. And then, of course, I would deduct my taxes, which I do pay quarterly taxes. Now for the good trade section of the content, I'd like to talk about 2 trades that I did here. One is a good entry and a second one I would say is a bad entry and a lucky trade. So both trades are profitable. And if you look at my previous content, normally when I open a contract, I denote that by this blue vertical line. And when I'm long, I denote closing the contract with an orange line. And if I were short, then I would be denoting the close with the purple line. So with this first trade here, which we entered 2 contracts at 33,707 at about 8 a.m., you may say, hey, it didn't cross over yet, which is correct. The MACD has not yet crossed over, but the stochastic RSI is definitely headed to the overbought area. So the main reason I entered that was because, it's a higher high on the candle itself. But if I look on the tick-based chart, the crossover actually already occurred at 7:49. So when I entered at about 7:59, which was the 8 a.m. candle on the time-based chart, the signs were there that it's heading on the direction I want, where the MACD is starting to diverge, and also on the stochastic RSI, we're on the overbought side. So both the time-based and the tick-based were both in agreement. And with this trade, we entered at 33,707 and we exited at 33,743. So that's essentially, 743 minus 707, that is 36 points. And since we're trading 2 contracts, that was essentially a nice $360 gain right there. So from about 8 o'clock to 8:15, so 15 minutes, $360. That was a really good trade that I started with in the morning. And then the second trade here, I would say it was a bad entry, but I was patient enough, and thankfully I was positive on this. And this one I would consider a lucky trade, not something I would really recommend. So the problem with this second trade that I had here, which I entered at 8:40 a.m., is I was seeing that it was diverging some more. But normally in the tail end of this is when I started to worry, because I normally try not to enter towards the end, because that's when it's a cyclic event. It's like a sinusoidal wave, so you're already on the tail end of it. But the reason that I entered on this candle at 8:40 is, if on the right you look on the tick base chart, the color was changing on the MACD, so I was starting to see a bit of a divergence. And then the stochastic RSI, I saw that was heading back to the overbought side, so I took a little more of a risk on this. So I actually entered this trade at 33,759, and I'm gonna draw a horizontal line here to show you where that is. And it was actually a bad entry, because it was, if I remove this line, let me move it to the side a little bit. If you look at this candle itself, it was basically on the high of that candle. It was on the wick, it wasn't on the body. So that should have been a sign for me that it was a bad entry itself. But since I was long, I was being patient, and it was actually quite a bad entry, because you from an entry at 33,759, we actually went all the way down, draw down at about 33,628. So 628, that's about 131 points drop. So times 10, I was actually down almost $1,310 at one point. But I was looking at the hourly, and I like what I was seeing there, and I guess you could say I was stubborn also, that I didn't want to just cut my losses. So thankfully it reversed right back, and from an entry of 33,759, I exited at 787. So that's about a 28 point move. So that's a 28 ticks gain that we got there, which $280 is not bad for a trade where I was down almost $1,300. So I do consider this a lucky trade itself. And one may ask, why did you exit right here at 950 instead of just staying patient, and then seeing that the fact that it actually went up all the way to 33,951. So we actually left almost $2,000 a gain there on the table if we had stayed more patient. But like what I tell myself, hindsight is the genius of hindsight. That's never a good way of thinking about things. And when I did exit, it was because I was happy. At that point, I already reached $2,000 for the week, and I decided to end my day and go out, enjoy the nature, and go hiking. So that's one of the main reasons that I exited at that time, and I was happy with that decision. So that definitely was a great day for me, and those were my two good trades of the week. Now let's talk about my bad trade of the week this week, and that is the reason why we had the mark-to-market loss today of at least $1,300. So the bad part about this trade was I already told myself that maybe I should take Friday off, since I already reached the $2,000 weekly goal. But at the same time, I was like, hey, I'm doing well. Let's push. Let's, try to trade some more and do well and try to reach a higher amount. The problem with this entry that I made here at about 4:25 p.m. is I was actually trading this using my cell phone. So one of the dangers with trading with your cell phone is that you don't see all the data that you normally would see with your computer, which, I've always told myself don't do that, but I guess laziness or complacency was the reason that I did do this. So I opened two contracts here at 33,934. I did it because, based on what I was seeing on my phone, the candles were very bullish. And then if I looked at the MACD, I thought it was about to cross over. It actually did cross over for a bit, and that's why I entered it. And then on the stochastic RSI, we were on the overbought side. And then the problem here is if I look at the tick base chart, it did not agree with it. The MACD has not crossed over at all, and the stochastic RSI wasn't on the overbought side. So if I were on my computer, I would have seen this and I wouldn't have entered it. But since I was on my cell phone, it was a little harder to see those. So really, my bad was really just on me. So it's not the strategy itself, it's more of my habits, I guess, that I need to fix. So the tough part about this is, I entered towards the top, so 33,934. And if you look at how the market did today, definitely went way down to almost 33,679. So from 934 to 679, that's almost $3,000 that we were down at one point there. So it was tough. It was tough to hold it, but I guess it's one of those where I'm long, and I like how it ended here towards the end, where it really pushed it above 33,800. So it was a strong push towards the end there, and that's one of the main reasons that I decided to hold on instead of taking the $1,300 loss. Yes, I lost it on mark to market, but if things go well next week, it should go positive. But again, I don't know the future, so I am taking a risk for holding on to this. So something that I do like to look at sometimes is I look at the day chart. So each candle represents a day here, and as you can tell, for this week we had 3 consecutive red candles, followed by a nice big green candle yesterday and another red candle. So that's 4 candles in a week. So that's not something I see too often. With how strong the market is going, I'm still hopeful. Again, that's a bad keyword, being hopeful, that this will reverse and get away from this flat plateau that's been happening here and move right up. But at the same time, this could go all the way down also. So risk I'm taking, but I'll pay close attention on Sunday and we'll react accordingly on what we'll do. So yeah, for this week, it's not one of the best weeks, but definitely a lot to learn from for me personally. It's quite an exciting week because I started evaluating a lot of new things. For example, this was a chart from Comprar y Vender that he suggested to me. So with the deltas, I'm trying to study that, adding a +1 delta and +2 delta. I haven't made sense of it yet, but on the side, I'm definitely evaluating it to see how it can be of help to what I'm doing. Also, another study that I'm currently evaluating that I learned from a good friend of mine is called the sequence counter customizing. Haven't quite made sense of it yet. I'm still trying to evaluate which time it works best for me, but I do appreciate all these suggestions because it does help me evaluate new things to see if it complements what I'm using currently and to help me with my trading. So if you have any suggestions on any studies that you do enjoy, please let me know on the section comment below. Please do subscribe if you enjoyed the content and learned something, but if not, give me another chance and hopefully you'll learn something on the next one.